Well, good weekend, all. Ira Epstein with your metal market wrap-up, and this is your weekend edition where we're going to look at the longer-term charts, the weekly charts, and try to figure out what to do on this Friday, and this is the 16th of February, 2024. Well, we saw the CPI number come in on the hotter side. We saw the numbers of CPI early in the week come in hot, so we've got, did I say CPI? PPI today, CPI happened at the beginning of the week. And so what does it do? Well, here's what we know. We know that inflation is sticky. We know that the Fed members that have talked and spoken so far to us this week are pretty unanimous in one thing. They don't want to be ahead of the game. They want to see that they've got things locked in so that once the cuts begin, they don't have to start. They can get the market and ease it down. They're not comfortable where they're at right now. Some of them think we can get maybe 2 cuts, some think 3. I don't see anybody talking 5 and 6 anymore. So the market's exuberance at the beginning of the year is gone. Now, that doesn't mean that the uptrend in stocks is over, because the market's in love with artificial intelligence, and anything that touches it, they want to put and buy for the fear of missing out. FOMO, as it's called. That's a negative for certain things. Let me explain. Number one, the dollar is acting strong. It's in the 104 area. In the metal markets, the negative is a strong dollar and higher interest rates. Interest rates have been climbing. If you take a look at mortgages, they're over 7% again. So you'll say, but Ira, we had a rally today. Yes, you did. What's the first day that the Chinese came back from the lunar holiday? Today. What did I prep you for all week? Last week I said, nah, don't get too bearish. Copper markets and other of those markets. When they come back, the Chinese, then the purchase orders start coming back in as they fill things up. It's normal. I see this every year that I watch the markets, and people tell me, nah, Ira, it's not going to happen. And I watch it and the support comes in. It doesn't mean a trend turns. It means you don't want to get overly bearish as this part happens. That's what I think is going on. It's very difficult to want to be long the gold market when interest rates keep going up, and they're in the 4.3s. Mortgages are at 7-something right now. The dollar, not looking bearish. How do you get bearish on the dollar here until the economy turns and the Fed has to do something? Right now you're seeing strong inflation, strong labor, right? So we're all looking to see, when does labor drop? We haven't seen it with the jobless claims. Eventually, we'll get this next jobs report. Maybe that'll be it. We certainly hear from the corporate earnings that are out there every time they're releasing it. Yes, and we're going to let go of X amount of staff. We've overstaffed, and now we can let go. Well, what you do is you're saving bottom line, number one. Number two, the market has changed, and you have to accept that change. That change is you can now not worry about getting workers. And before, boy, if this economy explodes, I got to have those people. I need these tech people. Who are they letting go today? Read these companies. They're tech people. They're not as worried as they were. That's how I'm doing it. Service industry inflation. I've talked to you about this week because it affects the metals in a big way. One of the big things is, going out dining has become an expensive event, even for a mild dinner at a nice steakhouse or whatever. I'm not talking $200 steaks. I'm talking a nice steakhouse, okay? It's gotten expensive. McDonald's has gotten expensive. Don't trust me. The corporation said it. They're trying to find a way to lower the price of meals because you can't get it to the point where you're almost at $10 for a value meal, all right? I mean, it hurts the pocket, and you're not going to get the traffic that you wanted. So these are the things that are going on. When I look at the gold market, the bigger story on a monthly basis, you're still nicely over the 18-week average, 18-month moving average of closes. So the big picture is still friendly. But once you start narrowing in, you're at the battleground where you went down, and you're at, for all purposes, the 18-week average of closes. You actually got much more under it, and you recovered a little bit with today's $9 rally in the market, but you're still down under that number by about $8, $9. You can see that. Okay, so the bias is turned down in the market. You can see on the charts the pressure. It doesn't look like a market that's crashed. If it crashes, here's a number you can search for, but I have my doubts that the market wants to take it down that far. I don't see it on the chart, but the chart is temporarily in what camp? When you've got lower highs, lower lows, forget the name of what's on the chart. That's bearish. In order to negate it, you got to get all the way back over 2064.50. Where's the support? The 18-week average, and you finally finish literally right at it, all right? You're slightly under it. The bears have control of the market because you're under it. So the resistance is 2018.5, but that's a big resistance point in terms of the risk associated. To go short there, you got to take on almost a $40 risk. I don't think you're going to attract a lot of short sellers until that risk narrows in. What I do think is going to happen is the Bollinger Bands can collapse on you, both the bottom coming up, the top coming down, and you go more or less in a sideways pattern right here. That wouldn't surprise me. Momentum down, trend down, bias down. If the market wants to take a hit because the dollar takes off for any reason, then wherever that Bollinger Band comes in is probably your main support. Right now it's 1951. The gold-silver ratio finished up literally at the 18-week average of closes. I'm laughing because how silver came back. It pays attention to the lower band. Some of this stuff is so darn obvious, I don't know why traders don't get it, but they don't. So if I had you short the market, just making this up, if you were short, I'd be screaming. First, the first test of a 100-week average, I never trust it. And I want to use the word never, never. I'm very reluctant to go short under that for my clients when I'm telling them buy here, sell there in the mornings. And the reason is you generally snap back or at least play with it. And you did. In all fairness, this is a weekly chart. 1, 2, 3, 4, 5, 6, 7 weeks, almost 2 months, you've played with it. So you've lifted back up a little bit. You're not in an uptrend. You're in no trend. You have a higher high, lower low. You held that band. You got oversold, and you're giving a bounce. It happens to coincide with maybe industry is picking up. We saw the New York Empire State numbers. We've seen other regions picking up in industry. Maybe that's what's doing it. Let me come over here to copper. I jumped it. In the copper, I'm not surprised to get the bounce. I told you that when China's gone, they're half the world consumption. And when you get a lunar holiday, it's a national week. You know, in America, we get a national holiday. They take off a whole week. In fact, the holiday actually lasts about 16 days. They come back to work, and today is when they come back to work with time zones and all. It's for us here in North America, it's today. And you saw how the market did give you the response today. Half the gains of the week were made in one day. Platinum, it's going to fight a battle. 921.10. If it can clear up here at 944, you change the game. But it's still looking like an overall market with resistance. And silver, even on its bounce, is just up to the 18-week average of resistance. And in the dollar, I was scratching my head the whole day. I think the dollar belongs higher than this. You've got Fed members saying, no, 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 we're not ready to begin the cutting. You've even had, was it Bostic today? Maybe 2 cuts are appropriate. Certainly, I don't hear anybody talking 6. It could change. If the labor market were to fall apart, it would change, but I don't see that with the jobless numbers. Therefore, I was surprised today wasn't stronger. Maybe it'll be a delayed reaction. I will be really worried if this week's lows are taken out because it's an outside week up. And generally in bull markets, and you've had this bullish trend, and this is called a continuation pattern, when you get the outside week up after that, I realize you're fighting at the 100-week average, and it has held this market for weeks on end. If it can clear that, wherever that Bollinger Band goes, maybe that's where price goes as well. But we'll talk about that as we get into our What's Up this week on Thursday. 12:15 p.m. I will open up the webinar. 12:30 I start. I end 20 minutes later. I try to stick with that 20 minutes. I don't make the recording of it available on the website. If you didn't get my email, you can call us or you can click up here. There's an icon you'll see. Give it a click, fill out the form, sign up. With that, I'm Ira Epstein. You have yourself a great weekend, and I'll catch up with everybody in the futures markets on Monday. You take care. Remember, it's President's Day. Stock markets won't be around. Take care.